Hey, it's Anthony Meisner with Land Title. Came to bring you your Boulder County update for the month. Let's dive right into June data. It's July here, shortly after the 4th, and kind of looking back, things have done progressively a little bit better than they did a year ago. Now, we do have 21% more inventory in the Boulder County area. We've had a slew of under contracts in the June month, but it has been very up and down, hit or miss month to month compared to last year. So the one thing that really points out and is kind of a glaring problem is our average sales price is down by 4.4% across the board. Now, we'll talk a little bit more about that in a second, but let's take a look at inventory by area. Now, one place we're seeing a lot of inventory, and maybe we should look at this detached first. City of Boulder is up 20%, which doesn't seem like a ton, but we're at 440 units. This is way more than we've had in the past. That's a real rising tide in the city of Boulder. If we look at somewhere like Erie, 231 units is a huge number for them as well. Also a large rise, 20+%. Now, places that we're seeing an extreme rise in inventory. Louisville, because of all the rebuilds and everything that's been going on there, 81 units, but that's 62% more than this time last year. Niwot and Superior are also way above the average there, 38, 37%. Those are pretty big numbers for the detached market in those ones as well. So keep your eye out as you're working through some stuff. The very lowest of the bunch would be Longmont, 304 units, is only up 10% from this time last year. Now, if we look at the attached units are in a very different situation. Erie, nearly no attached units on the market, only 22, down almost 100% from this time a year ago. Obviously, we ignore Niwot because there's very few attached units in there at all. Louisville trending very similar to the detached units, 92% more units. So there's a lot of inventory coming on the market in Louisville, but a lot of it's selling. Now, the kind of staple for the market, the average, close to that 17% of the whole county. Boulder obviously kind of leads the charge there with most of the inventory, right? 16% increase there. Lafayette, 27%, Superior, 22%. So Longmont being the small number again, right? Less inventory rising there because you have more buyers participating in the lower priced market. Now, if we get into our month supply of inventory, this is where it's drastically different, right? If we look at detached, the highest is Boulder. Hands down, 6 months of inventory. There's a lot of inventory, and it's because it's a large sales price. Now, if we get into most of the markets, we're around 3 to 4 months of inventory, including Louisville, even with its large rise in inventory. And in Niwot, being a more higher priced market, also 5.3 months. If we look at the attached market, this is where it gets interesting because most of these markets, look at this month supply of inventory average, 5.6%. Most of the markets are sitting there, right? Boulder at 6.2, Lafayette, Louisville's right at 6, Superior's at 5.7. Longmont, even though Longmont hasn't had a huge rise, it does have 4.5 months of inventory. Erie, even though we've seen what was going on in Erie detached, the attached market is remarkably lower. So it's much more in line with that detached market. Very interesting to see that. Days in MLS, let's combine these because it's probably not worth breaking them apart a ton. Lots of inventory leads to high days in MLS. Erie also has a lot of new builds, so 82 days in MLS should not be a huge surprise out there, but it is a tough one to swallow. Most of these markets coming in right around that 40-day mark outside of Louisville. A little bit elevated inventory, takes a little longer to sell, 54 days in MLS. Longmont, outside of Niwot, is the fastest market, and that one comes in just under 30 days. Now, I like to look at this by price range because price range tells us so much of the story, right? I cannot believe another month in a row, and even year to date, we're looking at the 2.5 million plus market, and we are soaring above where we were this time last year. It's very clear that big money is coming to park money in Boulder in real estate. So that tells you that real estate is a very good investment in Boulder County. And I think that's worth telling that story. The $1.5 to $2.5 million market, that's really struggling because of the volatility in the stock market and many other reasons that are causing high price of money, right? I mean, jumbo loans are more expensive. So that market right there is a very tough market. We've seen it drop by 18, 19, 20%, depending on where you're at. Now, the middle of the market, that median or that average of the market, that's what's doing a little bit better or about the same as it was a year ago, 600 to 1.5 million. Things are moving. They're just tough, right? Because there's so much inventory. Now, the inventory rise is pretty much across the board, right? If you look at the year-to-date numbers, I mean, some of these numbers are actually shrinking a little bit, but it's largely due to all kinds of different factors, right? But not as many buyers as there are sellers. So I think that's the biggest takeaway. If you look at it by month supply of inventory, let's talk about this one in detached first. The lowest end of the market in detached can be very competitive. 2 months of inventory, there's not a lot of the market that's sitting in that price under 600,000. But when you look at, well, Lafayette, Erie, and Longmont, there can be some of those single family homes still in that price range. There's just not a lot of inventory left. Now, if you look at that 600 to a million range, 3.5 months of inventory, it's going to feel really balanced, buyer and seller on even footing. Tough price points though, right? There's not a ton left in the county at those price ranges. Now, if we look at where we're starting at $1 million to $1.5 million, 4.5 months of inventory, it's going to start feeling very buyer favored. 1.5 and up, it is very much a buyer's market. So buyers are in control of that situation. But what you can see in the ultra luxury or even in the luxury market, 2.5, 3 million or more, the best homes are selling quickly. They're buttoned up, they're priced right, they're moving. Everything else is sitting. And you can see that because that's the fastest time in MLS. Those days on market are the absolute fastest at the highest luxury point. So it tells me most of the inventory is sitting, a few homes are selling, right? And out of the 12 homes that sold last month, you can see what happened. It's pretty cool to watch. Now, it is the fastest month of the market almost every single year in June. So keep in mind that most of these numbers are going to continue to rise over the next, through the third quarter. Now, let's take a look at, let's do this average sales price. Let's break it down detached specifically because it has been such a struggle. And we've talked about how the average sales price has changed in the county. You really need to break it down by area. It makes a bigger difference. Also, detached versus attached, drastically different numbers. So let's talk about Boulder first. City of Boulder, over the last 12 months, you've had 2.8% change, right? So the tide has risen by about 3% in the city of Boulder for detached single family homes. I think that the luxury market has slipped a little bit where we've seen the lowest end of the market, the median homes continue to rise in the city of Boulder. And that's kind of where we come out in the wash with that. If you look at it year over year, it was down 7%. So it tells you we sold a very different type of product. Now, Louisville, we've been talking about this for a while, but with all the new builds, all the rebuilds that have been happening in Louisville, you're still up 6%. That doesn't necessarily mean that the resale homes are actually increasing 6% in value, but we're building a much more expensive product. It's coming out in the numbers for sure. Superior is a tough one. Those resale homes are really struggling. You can see that we're only up 3% and the new build stuff is going for a premium. So I think that the resale homes are really clearly taking a hit and it's been a struggle. Places like Erie, it's just a function of so much inventory being on the market that, the month over month change might have been a little positive still, but we're down year over year by just a little bit. And over the last 12 months, we're dropped about 2%. So I mean, it's not a bad thing. Housing prices can settle a little bit, and when you have that much inventory in that big of a market, they're bound to come back, right? It's a very desirable area. Longmont seems to be favoring as the most stable market of them all, right along with zero, right? Nothing changing up, down. That looks pretty good. So for a lower price point market, very, very stable is great news. Now, the attached numbers, this is where it is really hard to swallow. The luxury market in the city of Boulder is doing really well. But if you look at the year over year numbers and, the trailing 12 month numbers show plus 2%, very deceiving number because those smaller units, those kiddie condos, those type of things, they are really suffering. And the only thing offsetting that is the luxury inventory coming to market. Look at Louisville. Louisville struggled a little bit. Some of those are fairly stable over the last year. But look at the stuff like Lafayette, Superior, Longmont. Those markets, they really have been hit pretty hard in the attached market. Increasing HOAs due to lots of inventory, less buyers in that marketplace, right? That's created this problem where we have seen a drop in the sales price, right? Year over year, we're down 6% across the county in the attached market. And I think it's very important to take that away. Now, if we talk about sort of the market as a whole, how is the market doing? Well, year to date, we're up 2.6% in sales. Now, June had a lot to do with why we were positive. So we had a great June. We had a pretty ugly February. If you remember right, it was pretty cold and it was hard to get showings. But we have seen buyers continue to participate. Like I've been saying, though, I do worry that July may not have the same characteristics as June. So here we are in a very stable interest rate environment, close to 7. It has been for a long time. I think more of the same is what you should expect. And you can see that with our total sold units. By market, you can see those down below. Boulder's up 8%, Louisville's up 21% in sales. It's great to see that. Superior, 34% more sales than this time last year. Lots of stuff coming back on the market, right, from after they've been rebuilt. And even some of that stuff in those bigger neighborhoods are selling pretty well. But it's just tough. Lots of inventory. Now, Lafayette and Niwot both coming in negative compared to last year at this time. But if you remember right, Lafayette outpaced all the other markets last year. So it is in perspective. Okay, last slide to talk about is the percentage sold price to list price. This is pretty stable across the board, pretty similar, 98% across the board, right? I mean, this doesn't account for concessions. It doesn't account for price drops. So this is a really tough one, but it's important to digest this. So what does this mean? It means that buyers are getting a better deal than they were this time last year by 0.5%. And they did about 0.5% the previous year before that. So buyers are having more and more power, and they're asking for more and more concessions. Homes under $1 million, we're seeing concessions somewhere in the neighborhoods of 10,000 a house on average, and it's about 60% of homes are getting those. The other ones may be cash anyway, and they're taking price drops. So this is a tough one to look at, right? And it doesn't tell the whole picture, but it's definitely worth telling the story of why, right? And I think the other thing you can look at is when you look by price range, obviously the lowest end of the market that's done the best is the part with the highest listed sale price, and the luxury and ultra luxury, you can see that it's suffered even more. And a lot of those take big price drops before they even get to this point. So hopefully that helps. If you have any other questions, concerns, need any other data, please feel free to reach out to me. You can always also subscribe to the channel for more videos and more content. See you next time. Bye.